The following program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth and has a proven track record of managing long-term investments, surpassing the markets in the long term. The information shared in the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And we are KLFE, The Answer, and we're talking The Answer about money. So I wanted to start and let you know I will be speaking in Orlando this coming week. I do a presentation on 2020 and beyond predictions, including what's the outlook for China, U.S., and the world. So that's my opening presentation. I'll be talking about superior returns, minimizing risk, and how will this secular bull market end. I've been doing all of that in Orlando. A number of very interesting people will be presenting there, people that you've seen on CNBC, that you've read about in magazines, that appear in Barron's. I feel very lucky that I've been asked to speak a total of 3 times. I think I'm one of the very few that speaks that often. I don't know if that's because I have something really to say or they needed to fill slots. But anyway, I think I have something to say. And I want to start today by talking about a story about a person who got good grades in high school, but disliked authority, and his teachers disliked him. He was a person who was withdrawn and quiet. He was a daydreamer. He didn't pay much attention to the teachers. One teacher told his parents he wouldn't amount to anything. He had no discipline to learn. Another teacher told his father it didn't matter what profession he chose, he was never going to succeed in anything he did. In spite of all that, in spite of the impression of the teachers, he got the best grades of any student in high school. But he disliked authority, and the teachers disliked him. Outside of the classroom, he liked algebra and science. And he daydreamed. He called them thought experiments. And as he went to college, he continued to daydream and continued thought experiments. He thought about lightning strikes. What causes lightning strikes? He thought about moving trains. He thought about blind beetles crawling along curved branches. How does light move? If light indeed was a wave, then light beams would be stationary. It was a big puzzle in his daydreaming. He wanted to know more and more. When he graduated, he was interested in physics and wanted to be a professor and teach. Graduated at the age of 21. His college professors, however, did not want him as an assistant professor. He graduated actually not at the top, but at the bottom of his college class, the very bottom, the very last person in his class. And he wrote every physics professor in Europe. Most of the physics professors didn't respond, and those that did respond rejected him as an assistant professor. So the 21-year-old, the only work he could do was as a math tutor. And for 2 years, from 21 to 23, he was unemployed, and he finally got a job at the patent office. That was the best he could do. He continued to daydream, and at age 26, he wrote 4 papers that were published. Now, normally academic papers are published, and they have to be peer-reviewed to be published. Peers have to deem what's written to be worthy, and he has to show proper respect for his peers. But what he did, he had the papers published without any of that. But every paper was a significant breakthrough and would change the world. He wrote a paper on space. He wrote a paper on time. He wrote one on mass. He wrote one on energy. And it completely altered the scientific world's understanding. It included work on particle physics, and it overthrew classical physics. It overthrew quantum mechanics. And of course, as Paul Harvey would say, the rest of the story is that Time magazine picked this man as the person of the 20th century. It was, of course, Albert Einstein. Now you know the complete rest of the story. And I like this story because he was an outlier. The entire physics world believed in certain theories, and he could not, in his daydreams or thoughts, make a consistency between different parts of physics. He could only imagine there was something else, some other theory that was needed to explain physics. And I kind of identify with that, to be honest. Some time ago, I did a 5-part series on financial planning. Financial planning, it has become one of the big tools in the investment world. But the reality is it does not work. It just does not work. When I started Adams Financial Concepts, I came with the idea that we would have to do financial planning. I bought the very best financial planning software you could buy. I sent my administrative manager to a week or a 10-day school to learn about how to prepare the reports. We prepared our first report. It was 400 pages long. It was beautiful. It had all sorts of graphs and charts and pie charts, and it had a rainbow of colors. I mean, it was a magnificent report. So the night before the presentation, I took it home to read it and get familiar with what went on. And as I read the report, I became flabbergasted and horrified at what was there because the assumptions were completely wrong. What was done in that report was not valid whatsoever. Now that was in 2005, a long time, 3 years before 2008. That's not a long time, but for me it was a long time. By the way, when we presented the report to the client, we'd slimmed it down to less than 30 pages, most of which was the data that went in and a very few conclusions, but nothing. We threw out over 370 pages of that report. They were invalid, incorrect. And it took until 2008 and 2009 to show that financial planning didn't work. The sad part of that was that it made thousands of investors found out that they were short on funding for retirement or for children's education. Back in that time period, I told this story, and I told this story about some of the people that I'd met that had found their financial planning left them short. Children that planned to go to USC ended up going to community college instead because what the financial plan said they would have, they weren't anywhere close. People that were planning to retire had to work longer or retire with less money. But it was sad because to me, the greatest sadness of the whole thing is that the financial planners, the proponents of financial planners says, this doesn't work. We've shown that it doesn't work. Instead, they tweaked the approach. They just simply made it different, but still just as wrong. So like the physics professors who push back on Einstein, the proponents of financial planning, and there's colleges of financial planning, they believe that it's still going to work in the future. And I believe that they're wrong. You know, I'd be happy to be wrong. I would happy to be wrong. And all the people that do financial planning plan for their clients and have great success, but I don't believe it's going to happen. So people don't like to hear bad news or anything inconsistent with their existing opinions and conclusions. Daniel Kahneman, who won the Nobel Prize for a book called Thinking Fast and Slow, said people don't spend even the smallest amount of time to figure out what has gone wrong. They really don't want to know. Even smart investors who knew it wasn't possible for Bernie Madoff to provide quarter after quarter after quarter after quarter of consistent positive returns month after month for years. Even sophisticated investors knew that wasn't possible, but yet they continued to invest. And I believe that some big investors thought that he was doing something wrong, like front running, but they didn't see it as a Ponzi scheme. They thought he was just buying stocks and had information that others didn't have, inside information, fast information. You know, even a professor who wrote a book on gullibility invested with Madoff. He wrote a book on being gullible. He invested with Madoff. You know, there's a book on Charlie Munger that points out sometimes the fewer the facts in a well-told story, the more believable. It's only when people really get real facts and analyze real facts that things work through. I'm not sure that most people, even with failed financial plans, realized that financial plans didn't work and couldn't work. Which leads me to another story, of course, and that's active versus passive mutual funds. Eugene Fama shared the Nobel Prize in 2013, showing that fewer than 7% of professional money managers, including mutual funds, do not earn their fees. Fewer than 7% earn their fees. 93% do not earn. Porter and Triffs wrote a thing called Career Paths of Mutual Fund Managers, The Role of Merit, where merit equals performance. And I'm going to come back and talk about that right after the commercial break, because we are coming to a commercial break. I've got a very interesting guest, and I specifically chose the story of Einstein because I think my guest today may fit that same category. Don't go away. I'll be right back after the commercial break. And if you miss any of this program, you can find it within a few days on YouTube or on our website. Don't go away. Got more to cover.
About Money with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com. About Money with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com.
I started talking about a study that was done by Porter and Triffs called The Career Paths of Mutual Fund Managers, The Role of Merit. And by merit, they meant performance. And there's a lot of literature on the performance of mutual funds, but there's not much on the managers. And this study focused on the manager and how long solo managers of mutual funds lasted. And what they found in looking at mutual funds, 18.8% of mutual fund managers last less than 1 year. They start before the year is up, they're gone. In the second year, another 19% are gone. So that's 37%, over a third of money managers last less than 2 years. And at 3 years, another 17%. So in less than 3 years, over half of mutual fund managers are replaced, which explains why the number of mutual fund managers that experienced 2007, 2008 is almost insignificant today. It's fewer than 20%. 80% did not experience that. They were not managing money in that time. Actually, it's over 90%. But when I say that, they didn't experience it in any way. They didn't experience it as an analyst. A lot of mutual fund managers were still in college. That's how fast things turn over. In the fourth, fifth, and sixth years, another 27% are gone. Over 3/4 don't make it into seventh year. And after 10 years or more, there's less than 7% of mutual fund managers that are less, which all correlates with the study that Fama found when he shared the Nobel Prize in 2013. Only 7% of money managers succeed in earning their fees, and that doesn't mean in surpassing the S&P 500 when fees are accounted for. There's a pressure to perform. There's a quarterly comparison that comes out every quarter compared to the index. And when you look at it, for the fourth quarter of 2019, I was slightly less than the Standard & Poor's. But for the year, I was 40.1% 41% when the Standard & Poor's was up 31.5. And I'll talk a little more about that later. But, I mean, there are periods of time when you underperform. But there's a pressure to perform quarter by quarter. In my opinion, target date funds in 401ks have a tendency to be held longer, but they have a tendency to underperform. So if you look at it, what's happened in a lot of mutual funds is you end up with money managers or fund managers who are becoming actually index huggers or closet indexers. They own most of the stocks in the index that they're being compared to. Europe and Asia have begun to crack down on that in the last few years to actually say if you publish yourself as an active fund manager, you should be managing the fund and not trying to match the index. But even with that, even hugging the index, they tend to underperform and they don't last. There's a study done by the people that run FundX. They looked at 10,454 mutual funds and ETFs over a long period of time. During that time, a number of those funds died. If you look at what's been happening, Janus 20 was merged into Janus 40. Janus International was forced to liquidate. The Janus Fund was merged into Janus Research, and the Janus Fund had been around for decades. It was a bad year, and that was just 2017 for Janus. There were a number of other funds that did as well, merged or liquidated. That was why you ended up with only 269 funds that out of that 10,454, 269 had survived the 10 years. And those funds outperformed the market, every one of the 269. Some had high fees, some had low fees. There was no relationship to fees and performance. There's been a lot of literature saying the higher the fees, the lower the performance. In this case, when funds are there for a long time, when the money's been managed for a long time, it seems there's no relationship to fees and performance. You know, R.W. Baird looked at a number of mutual funds a few years ago and found 370 mutual funds that had outperformed their benchmark over 10 years by an average of 1% per year. The average was 1% per year, not every year, 1% total average over 10 years. And 100% of those had underperformed for at least 1 year. 85% had underperformed for 3 years. 57% had been 10% or more down during at least 1 year, and 25% had been down 15% or more during a year. 25% underperformed by 5% or more in 3 years. And I identify. I'm an outlier. I march to my own drum. I'm not concerned with performance every quarter or even every year. My focus is on the longer term, 5 to 10 years. And most of my peers are focused on financial planning, something shown not to work. And my passion is to maintain and create wealth. My clients don't accept average or mediocre, and I identify. Jason Zweig of the Wall Street Journal interviewed Charlie Munger in 2014. And Charlie Munger, of course, is Warren Buffett's partner. Charlie related the following story. He said, everyone wants to be an investment manager. Raise the maximum amount of money, trade like mad with one another, and then just scrape the fees off the top. I know one guy. He's extremely smart and a very capable investor. That's what Munger is saying. I liked him. So I said to him, what returns do you tell your institutional clients you'll earn for them? And he told me 20%. And Munger says, I couldn't believe it because he knows that's impossible. And I said that to him. And he said back to me, Charlie, if I gave them a lower number, they wouldn't give me any money to invest. That's how it works. And nobody goes back and checks the returns. There's a reason that I publish my numbers and send them out on the website. And you can find my returns. I just put them on the website this week because we just got them. Yeah. My returns over the last 11 years have been 17.36% per year versus the Standard & Poor's total return of 16.3%. 17% seems like a really high return for a long period of time, both for the Standard & Poor's and for what I do. But I want you to think about this. In the last secular bull market, the bottom was reached in 1979. It finished in March of 2000. The average return on the Standard & Poor's during that entire time, from 1979 to 2000, that's 21 years, the average return per year was 17%. We're not far from that. We're very close to that right now. And what I'll be talking about in Orlando is, will that continue or not? If you've been listening to the program long, you know that I expect this secular bull market to last for a number of years. Can it last until 2030? Very possible, in my opinion. Anyway, that wraps up what I want to say about mutual funds. That wraps up what I want to say about financial planning. I want to introduce my guest today. There was a book that was written called Quirky. It talked about some of the people and what they've done and how they are quirky. I lifted the story about Einstein out of that book, but the book talks about Steve Jobs, talks about Elon Musk, Mary Carey. It talks about a number of people who are extremely intelligent and make world-changing businesses. And that is my guest today, I believe. I just met him for lunch this week, but I wanted him on the program. Welcome to the program, Trevor Norboom. He didn't know I was going to say that either.
Thank you, sir. Good to be here.
So why don't we start with your background?
Sure. Wow. It is a very eclectic background, obviously. As far as nerd-wise, or I mean, as of where I've grown up?
It's starting out as a foster child.
Oh, wow. Yeah. So, yeah, didn't really know, family or have them in my life. I was passed around, from home to home with a lot of good families. Sometimes I didn't. It's not that I was bad. It was just, circumstances of life. And during the 80s, being a kid, you often, I don't know, you just got shuffled around. So, yeah, that's kind of, that was my world,
Graduated from high school?
Oh, yeah. Graduated high school at like 15 and a half. Went to college that summer, start studying, computer science. I've been writing code since I was about 8, 9 years old, and just got hooked on it. So, and still do it today.
And they didn't allow you to live in the dorms?
No, my freshman year, I was so young that the dean actually, I had to get a spot off the campus because they thought that the older kids would corrupt me.
Fascinating background, but not atypical.
No, very interesting. And that was just the computer science side of things. And then, I also went to school to get my CIW, which is my Certified Internet Webmaster professional degree. Also went to Brooks for film and photography. Recently, about 8 months ago, I went to MIT to get my HCI, my Human Computer Interactions degree. So a lot of fun. I also have like 29 Microsoft certifications. So yeah, I like being a nerd.
We're going to come to a commercial break, and so don't go away. There's a lot more to this story. There's people like Trevor are people that change the world, whether it's doing electric vehicles, whether it's doing a special app, a special phone, or some of the things he's doing, and you want to hear about what he has to say. I have to prod him along, but we'll do that. So anyway, stay with me. We've got a lot more to come, and I want to finish by talking about artificial intelligence in the last part of the program. So stay with me. We've got a lot to cover, and we'll be right back after this commercial break.
About Money with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com.
Taking care of business.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's Mike.
I'm here with Trevor Norboom. We just got started. We just got into his background, but he's one of those people, like I mentioned before, the Steve Jobs, the Elon Musk, those people that change the world by doing specific things. And I want him to talk about one of his things for the people who are sight impaired. Tell us about that.
Yeah. So, man, at Microsoft, I'd been working out there for quite a few many years, building fun technologies. But for the last 18 months, I had been a part of the accessibilities team, where we work on helping single individuals to actually help them have a better way to be inclusive in a work environment, or even just in total about how they go with their day-to-day lives. So in doing these things at Microsoft, I started spinning off with my own accessibility products or ideas, that verticals that people haven't touched in a while. So the visually impaired, the idea was that that stick hasn't been touched or even had any technologies or anything even adaptively added to it in a very long time.
The white stick.
The little white stick with the little red, and you tap it and swing it. So I had an idea to actually embed it with some smart tech to add voice guidance, GPS, object detection. We're using LiDAR, also using haptic responses to let them know that the object is close. Also being able to actually call out what objects are using 3D camera systems. So the idea was that we can actually set somebody out in the world that has visual impairments with a little less oversight that they were used to have to always have. So this allows us, the idea is to be able to let them say something that they want to do, go to as far as to the stick, and then have them be able to be guided without any oversight from anybody else, adding more freedom to their life.
And your idea on how to get that into the world?
Oh, yes. So we actually can translate some of the technologies that we have as well to make a vest for canines for the police agencies. So the idea is to actually use that contract for the police agencies to give the walking stick away for free.
And for climbers and mountain climbers and
yeah, so that when we want to translate it away from this vertical of actually helping people, of course we can always push it into an enterprise solution, which for mountain climbers or people that just want to move through life and be able to be told on their journey of walking versus driving. So yeah, it's easily translated into an enterprise solution, not just for single people, but the idea here is to actually help people.
I mean, the concept is incredible, and it's something that most people don't think about. I would never think about that. It just seemed like that was a way of life for someone who is sight impaired,
Mm-hmm.
and yet you put that together and have created that.
Yeah. Like I said, for me, it's I have these thoughts about building things and being able to help people, and in doing that, I have a lot of fun building it because I enjoy it. But then again, it's those things that people haven't touched. They haven't. It's a vertical, and I know it's a small fraction of people. I get that, but why are they overlooked? We should try to help them be more inclusive in today's environment, but also in the world itself.
Yeah, it's world changing.
Totally.
So you also did something with a motorcycle helmet.
Oh yes. Yeah. So we wow, it's probably about 15 years ago in Ventura. We were my wife and I. We actually met in college. We were on a freeway and we watched a motorcycle rider. He stopped on the freeway next to us and he just got rear-ended by another car and crushed in between a semi and a car. And so, of course, there's three nerds in a car, and we figured, well, how could we save this person's life? By adding visibility to their world. So we ended up, it's taken me quite a few years, but finally figured out and got enough certifications to build a fiber optic safety system that allows me to put fiber optics into a helmet. So when the rider hits the brakes, the helmet lights up. When he hits the blinker, the helmet lights up as well. So adding visibility, but also, in creating this one tech, I was actually able to spawn 3 other products from it and also have 4 other versions for the helmet now. So pretty exciting stuff. But the idea, once again, was to save lives. And in doing such, have a fun time building a good product.
So, and you're, very intelligent. I mean, my thought was to put it on RFID, but you said that's not going to work.
Yeah, we don't use RFID. The idea here is to actually, the helmet will become its own telephone itself. And that way we'll be using the cell phone itself to call into a conference room. That way there is no line of sight anymore. It's just a virtual conference room that everybody dials into. And then we use MeshNet to say whoever's got the strongest signal is the owner of the conference room.
That's pretty amazing stuff. So tell us about the derivative products too.
Oh, so we can actually, so the way that I've created this fiber optic safety system is that the fiber is actually, it's small, kind of like fishing string. So we can actually embed it into clothing. Not only that, but we actually have a couple of the products that attach to the motorcycle. And then there's an application where you can change the color of the light source from your phone, whatever color you want to have it as. So you can accessorize it and have some fun with it.
It's just amazing, the things you're doing.
Lots of fun. Yeah, I have a book of inventions, not just, from medical, but also in agriculture, as well as computer science, just putting some really fun stuff together, as far as in a whole of changing how we go about looking at things or even how we interact with them.
So tell us about some of the medical.
Oh, wow. So currently we actually are doing an actual implant. So we created a prosthetic for breast cancer patients a while ago. And now we've actually decided to change it from a prosthetic to an actual implant. So we created a tech that allows us to take a 3D ATOS scan of the existing and then create an exact duplicate in a silicon model of it. So we're still still working on it a little bit here and there, but we're moving forward pretty well with it.
So as an analogy, I have cavities and had silver, what do you call it?
Lead fillings?
Lead fillings. And when they were replaced with gold.
Mm-hmm.
And the old process was to take a mold of it and ship the mold off to a gold producer, and the gold producer would take it, and then they would ship it back, and it had to be fitted, and sometimes it had to be sanded off or whatever they did to it. Today, that doesn't happen. Today, you go into the dentist office, and they get the impression, they put it into a machine, and the machine spits out a gold crown. You have a gold crown while you're sitting there. I mean, what you're doing is, for someone who has a breast cancer, and to have a complete mastectomy means it's, 2 or 3 surgeries?
I think it's 4. And what we're offering, what we think we can do is actually reduce it down to 1 surgery with using this tech. So, better quality of life.
Better quality of life. And a lower price.
No.
It's better all the way around. So tell us about some of the agriculture things.
Oh, wow. So we started creating smart farm tech. It allows us to drop sensors into the ground and take readings of nutrient levels, pluminous gases, basically to help kind of get analytical data for farms. So that way when multiple farmers have large scale farms, we can actually start to get optimal growing sessions and start to really see, what our optimal nutrient levels should be. And then that we can produce a higher yield of the products.
So anyway, I wanted to have you on the show. There's not very many minds in the world today that are like yours.
Thank you.
And it's very special because you're one of the people that are changing our life and our world. And I appreciate that very much.
Thanks, sir.
Thanks for being on the program.
Thank you, sir.
So, talking about changing lives, one of the things that's gone on, one of the hot topics today is artificial intelligence. Artificial intelligence covers a huge range of industries. Several companies interviewed in this program have been involved in artificial intelligence, from VoiceBox, who took information of people talking and trying to distinguish between somebody saying volume, whether it meant the volume of stock traded, whether it meant the volume of a radio or TV, whether it meant a volume in a box or a crate. Making that distinguish. I'll get the word right. I should. Distinguishing between the meanings of words. That's significant in voice and speech. And as a human being, we recognize those differences. We recognize the context. But to a machine that deals in ones and zeros, that's a significant impact. That's part of what's been going on. Part of it is selection. That's been a significant portion and growth in what's happening in our world today. There's a paper that was done, another paper, on artificial intelligence and modern productivity. It was done by Paradow and, I'll mispronounce the name, it's Brynjolfsson, Rock Syverson, done in 2017. It made the comparison between alternating current and computers today. It's a very interesting paper because it said alternating current was available in the mid 1890s, prior to the 1900s. And yet, by 1919, fewer than half of U.S. factories had been electrified. Fewer than half. And they made the comparison to that and computers in the 1960s. It's very interesting because I remember what I did when I bought my first computers. And maybe we don't have time to tell the whole story, but when I bought a computer for home, I bought a computer for the office. I had 100 megabytes of memory. And I've told this story before. When the computer got really, really slow, I called an IT guy and he came out and he said, "You're running out of memory." And I said, "It's impossible. I bought 100 megabytes of memory." 100 megabytes. We're coming to a commercial break. I'll finish the story when we come back. So don't go away. You want to hear the rest of the story, don't you? Hang with me. I'll be right back.
About Money with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com.
Taking care of business.
About Money with Mike Adams on AM 1590, The Answer. For more information, click on adamsfinancialconcepts.com.
So I started talking about this paper and research that was done by Peridot, where they make the analogy of what happened with alternating current and artificial intelligence and computers. Alternating current, available by 1900, and yet by 20 years later, less than half of factories were electrified. In the 1960s, we had computers, and I said when I got my first computer, it was a desktop, but I remember going to school and writing in machine language, zeros and ones, and moving things in and out of the accumulator. I remember the terms. I could never even do that today. But I remembered doing all that, where you had cards you took down and you pushed into a machine. And you had huge machines that were maybe 20 feet by 20 feet by 8 feet high. And tape decks that spun round and round. If somebody was keeping data. I worked this summer for Pacific Gas and Electric, and I remember going into the computer room and seeing all the number of tapes, and those tapes were spinning and keeping track of everybody's bill. I mean, it was a huge process. Today, I mean, your phone has more computing power than those computers had in those days. But the computers came in 1960, and in the 1980s, I bought my desktop computer. The small computer. And for home, I bought one with 60 bytes of memory because I knew that I wouldn't need as much at home as I did for my office, and 100 megabytes for my own. And when it got slow, I called the IT guy, as I started to say, and he told me I had run out of memory. I told him it was impossible. Absolutely impossible. I had 100 megabytes of memory. He said, "You're out of memory." So he sold me 300 megabytes to add on to it, and sure enough, the computer that was slow before began to run at a normal speed for a while. And then I replaced that computer. I remember those days. I remember I bought 3 programs. I bought Word, I bought Excel, and database. I said, okay, I'm set for life with all the programs that I will ever need. That's it. What else could come down the road? I mean, what else can you do? You know, you can do spreadsheets, you can write documents, store your data. What else do you need it for? You know, I was pretty dumb in those days, and I wasn't that young either. But during those times, I began to realize that when memories were increasing by doubling every year and a half. They were doubling every year and a half. And that meant that people like Microsoft could double the amount of code that they were putting in every other year. And then I read the article about the space program and how Word, the number of lines of script in Word, were 100 times bigger than the data program for sending a man to the moon. I began to realize how crazy I had been thinking 100 megabytes would be enough memory for me for my lifetime. Today, in Seattle alone, there's over 8,000 software companies writing software for computers. And the amount of software that's going on is just incredible. When you think about the smartphone you carry in your pocket, that's a huge computing device. That's more than we had with those big, huge computers that sat in a room. So that's where we were. But that continues to grow now with the application of artificial intelligence. Consumers are using it, companies are using it, workers are using it. They're using it to make predictions more and more accurate and more complete. There was a time in which a lot of predictions were done by focus groups and by polls. Now you have Facebook that can target people down to specific things. And they not only take the data, but they make predictions and analyze what's going on. There's a very famous story about the Target used to analyze their customer data. And they found when women were pregnant, they changed their buying habits. And so the story came out that there was a advertisement that went out to women who were probably pregnant. And one of those came to the parents of a girl who was 16 years old. And the parent went flashing into the Target store to say, how can you send something like this to my child? She hadn't told her parents that she was, in fact, pregnant. I mean, that's the kind of analysis that can now be done. And it's a funny story. It's a sad story. But when you look at what's going on, you have that artificial intelligence. You have Amazon that looks at what you order and suggests what you should buy. Amazon's not the only one that's doing it. And think about what's gone on with the largest 2 taxi companies in the world, and the largest hotel company in the world, and the largest media company in the world. Lyft and Uber do not own a single taxi, and yet they're the largest taxi companies in the world. Airbnb does not own a single hotel room, and they're the largest hotel chain in the world. Facebook doesn't own any media content, and they're the largest media company in the world. They use the information. They use predictive. I once talked to a taxi driver. He said it took him 4 years to be licensed and go through all the tests. You know what it takes for a Lyft or a Uber driver? 4 minutes. I mean, the training is just incredible. And, it's the changing world. It's a positive. It's making things cheaper. And when you think about companies like Federal Express and UPS, routing the delivery trucks seems like it would be simple. But there's 15 septrillion possible routes every day. 15 septrillion, that's 15 trillion possible routes. So in order to route the trucks and make it efficient, they're using artificial intelligence or applied intelligence. McKinsey and Company estimates that they're cutting 1.3 trillion off the supply chain. 1.3 trillion just by using computers. That's how things are going. It's having an impact on jobs. It's displacing workers, so workers need to be retrained. It's changing our concepts of privacy. 2 billion users using social media, over 2 billion now. Their privacy is compromised. It improves convenience and it lowers cost, but it changes the world in which we're living. Those are things that are going to change us. Richard Foster of Yale did the study that showed that the companies that were in the Standard & Poor's in 1920 had an average life of almost 70 years. Today, the average life of companies is less than 15 years. I'm trying to find the name. Boston School of Business said that by 2025, 40% of today's top companies may not exist. That has a huge impact on what you invest in and where you invest. It's going to have a huge impact on staying in charge of your investments. I used to say all the time, when you think about the blue chip companies, a lot of them will be black and blue companies before too long. When you think about the changes that have gone on in the Dow in the last few years, things are changing very rapidly. And unless you're ahead of the curve, and that's the focus of this program, unless you're ahead of the curve, you'll be left behind. Anyway, that wraps up things for today. Have a very good rest of the weekend and week, and I will be back next Saturday.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you'd like Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1590. The Answer. The preceding program was sponsored by Adams Financial.